Hello and welcome back to another episode of the Investor Financing Podcast Q&A session. We've got Bill Davis here. And remember, you can go to investorfinancingpodcast.com/ask and you can ask your questions. We've got a couple questions tonight and here we go. Bill, start us off, please.
All right. First question is, why would I want to finance with a DSCR versus going conventional? It seems like the rates are better for conventional financing. Please elaborate on the benefits. Thanks, Thomas.
All right. So I have this call 2 or 3 times a week, at least, with different potential borrowers. And so, typically conventional financing is more inexpensive. You're going to get a little bit better rate. Now that the rates have gone up considerable on the conventional side, it's kind of, they're both DSCR and conventional financing for non-owner occupied properties are a little bit more pricey, but diving into the benefits of a DSCR loan. So the biggest benefit is this DSCR loan is not based on your personal income. We don't look at your tax returns. We don't look at your W-2 income. Another benefit for the DSCR loans are that we can make this loan to your business entity. So if you had an LLC or a corporation or some kind of limited partnership or general partnership, the loan can be made to that business entity, and then the members of that entity, whoever owns 20% or more typically, would sign as a guarantor. Most of these business type of loans, we call them business purpose loans, don't show up on your personal credit report. So that's another benefit, because if you end up having 30 mortgages, your scores are indirectly going to get affected. So the loans are made to the business. Usually, most lenders on these business purpose loans do not show up on your personal credit report. So that's another huge bonus.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Bo Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
Another benefit I would say is that we can also do projection based. So if I was going to buy a non-owner occupied property and I was going conventional, I couldn't use that income to qualify from the property because I don't have a signed lease. On a DSCR loan, they'll actually do a rental survey. They'll let you use whatever that rental survey says, which is attached to the appraisal. The appraiser is going to go out, do the appraisal, and he's going to also attach an appraisal survey, which is going to say this property rents for X amount of dollars. And we can use that to qualify you from a debt service coverage standpoint. So I think that's benefited in itself, that you can see why a DSCR loan could be more beneficial than a conventional loan. Lastly, another benefit is that I can take 3 or 4 properties and do a DSCR loan. So you have one loan on 3 or 4 properties. So you can have less mortgages to pay. You could then eventually bundle several big portfolios of properties, and they would all be under a business entity's name, and they're not in your personal credit report. So I think that's the benefits I see. And if you're self-employed like myself, it's difficult if you have a lot of write-offs to actually document your income. So most self-employed people that have a lot of write-offs, they're never going to be able to get a conventional loan anyways. I should say also that if you have very detailed or extravagant tax returns, it makes it even more complicated. So you're looking at a lot more paperwork on the conventional side. So I hope I answered your question, Thomas. Those are the benefits that I see with DSCR financing over conventional.